Not all companies have their fiscal years at the end of December. Okay? I picked Microsoft for a lot of different reasons, but one of the most important reasons was they have a fiscal year that ends at the end of September. Okay. Similarly, Apple has a fiscal year that ends at the end of September. More than likely, they're doing it because their biggest selling quarter is the fourth quarter. Apple comes up with new products. They sell it during the holiday season or whatever you want to call it. They just chose it that way. Certain companies, I think Walmart is one of those, their fiscal year ends at the end of January. So a December financial statement does not necessarily have to be a 10K. It depends on the firm. Okay. Let's download a different company. Let's do Walmart, for example. Enter either a name or the ticker, if you know the ticker, or Walmart. Of course, there is nothing called Walmart. You need to pick the one that has the ticker. All right. There are a lot of different filings, but for now, we're going to click on 10K and 10Q. I'm going to download the latest 10Q. In fact, uh, Walmart's fiscal year ends at the end of January. So their latest one available refers to as of October 31. Click on the filing. If you click on the link, it's going to give you a text document, which is what they filed. But if you click on filing, you can hit interactive data. Not only you can pick specific stuff, but here it says view Excel document. Click on that, download it. Let me call this Walmart. Thank you. September 30, 2024. Or no, October 31. Yeah, let's have that open too. There's a cover page. There's a condensed, consolidated statement of income. Unfortunately, there is no uniformity about the name of these statements. Sometimes it's just called income statement, sometimes statement of operations. In this case, statements of income. Balance sheet could be balance sheet or some other thing, but you kind of understand from what they filed what it is. And in this case, income statement, since this is quarterly, it gives you 3-month numbers, but it also gives you, in this case, 9-month numbers, in a sense, fiscal year to date. Since the October 31 refers to the end of third quarter of Walmart's fiscal year, you get 9 months stuff. If it's end of 6 month, second quarter, you get 6, 3, and 6. On the first one, you just get 3. And on the 10Ks, you get the 12-month numbers. And there's comparison to the basically years before. All right. This is a comprehensive income unless you're taking somewhat advanced accounting classes. You wouldn't know what that is. But in accounting 301, 302, you're going to see stuff like that if you're accounting majors. Balance sheets, okay. Balance sheet, it gives you basically 3 years worth of stuff. Actually, that quarter, end of the previous fiscal year, and the same quarter before. For the purposes of this class, we will also sometimes look at the statement of cash flows We haven't directly covered that in the lectures, but statement of cash flows is one place you can find things like dividends, and you can also find how much money that is spent on things like. You can also find depreciation in there. You could also find stuff like stock-based compensation, if there is any. For example, if I go to Microsoft's cash flow statement, there's an item that says stock-based compensation. And I'm going to talk a little bit about that. Especially tech companies give stock options to their executives. Okay. And by law or by US regulation, you have to expense those stock options. Technically speaking, when they're granted, those options are not in the money, which means when I grant you option to buy 100 shares and share prices that day is $50, you have a right to buy them at $50. So they don't have an intrinsic value, but that doesn't mean they are not valuable because you can do so anytime over the next 10 years, except you cannot use that right in the first 3 years, which is called vesting period. I mean, over the next 10 years, there's a good chance that stock price of that company is going to be way above $50, right? If and when that happens, you have a right to go to your company and say, here's $50, give me one shares. And in the market, it could be trading at 500 at that point. Because of that possibility, those options have value, and corporations are required to make a valuation of that. Uh, when we're talking about financial ratios and stuff, I'll show you a little bit about what they do. Uh, Among them, the so-called Black-Scholes, but they come up with some sort of value. Let's say they figured out these options are worth $300. Then you have to distribute that 300 to the vesting period. It's essentially deferred compensation. Okay, I'm giving you these options for the work you're going to do over the next 3 years for me. That's part of your compensation. It's something valuable. We just don't know how much you're going to end up making money off of it. One of the reasons you do this, you want to align the interests of managers with the interests of shareholders. Basically, if you have options like these, it is in your own interest as a manager to make, if you can, the stock price as high as possible. That's going to make the shareholders happy, right? Example, over about 2 years ago, Elon Musk had to sell a lot of Tesla shares, not because he didn't like Tesla anymore, but he had options that he was given back in 2012. They were going to expire. If you don't use them during that 10 years, they expire worthless. But at the time, Tesla shares, this is before split, were trading over $1,000, and the exercise price on those things were $12. So he had a right to buy them at $12, sell it in the market if he chose to do so at $1,000. As soon as you exercise them, whether you sell them in the market or not, IRS says you made money. You bought something that's worth $1,000 by paying only $12. All right. So they're going to tax you on that $988. And, if you're at Elon Musk's tax bracket, including state and stuff, that's roughly the half of what you made. Well, these people, they are very wealthy, but typically they don't have that kind of cash lying around. So he sold more than $2 billion worth of stocks just to pay the taxes on it. So these things can be very valuable. When Google was first formed, they hired a let's call it administrative assistant, but a secretary, and they told her, I mean, we're just a startup company. We can't pay you much, but we'll give you stock options. She said, fine. And that person is worth more than $10 million now. Or it was when Google went IPO. She's probably worth a lot more now if she has not sold them. So these things can be very valuable. And it's very common among tech companies, startup companies. It's not necessarily that much available in companies like Walmart. They may have things like restricted stock grants and stuff like that. We'll talk about them a little bit more when we come to chapter 7. All right. Now, I know not many of you have done the quizzes yet because I was kind of sick. I couldn't get around to posting them early enough. Next time it's going to be in time. But it's a good idea to do them before coming to class. At a minimum, you guys have read the chapter, right? At a minimum. Who actually watched the videos? I haven't looked at the statistics yet, but all right. So let's find out. I'm gonna kind of uh, do. Normally, I'm gonna have more questions, but I haven't implemented that part of it yet. So I'm gonna structure the uh, discussion based on this. This will also kind of show you how our Jeopardy is gonna work on Wednesday. Okay, let me pick something from here, and let's pick one of you. Okay, let's do individual. Okay. Oh, for some reason, it doesn't show you the thing. Maybe I should have used other screen for that. Come on. Why can't I do this? All right, I can still show the question here. And let's draw again. By the way, it shows the appearance of shuffling. I'm actually randomly selecting 500 times or more. This is the 500th draw. If I did it only once, it's just going to appear. That's only for theatrics. It doesn't matter.